Hi and welcome back to Cheeky Crypto. Today guys, we're going to be jumping down into the world of Cardano's ADA, taking a look at what's been going on most recently and what I think is likely to happen next. As I get into the video, if you find it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, check it out guys, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into this video though. So here we have Cardano's ADA paired up with USDT. We're using the 𝗕𝗘𝗪𝗔𝗥𝗘 exchange on their spot platform with the 1 hour chart. This is a smart money concept. It shows us the idea of big money coming in and out of the space. We're using the smart money concepts by 𝗕𝗘𝗪𝗔𝗥𝗘 indicator. However, it doesn't always show you exactly what you need to know. In fact, we can see right here that it's actually not shown us one of the fair value gaps. So let's go ahead and start by drawing that in as it goes right in here, and we'll just pull that across. So this fair value gap is coming in. In fact, I might actually just go ahead and write this on fair value gap, and it sits at, I've got to put this in brackets, it sits at 0.262699 up to the slightly higher range of 0.267351. Okay, so that's the first fair value gap that we just noticed just by pulling up the chart. And we can see it right in here. We tapped into it, but we have not filled the entire gap when we start to pull back down here. Now, we're actually, Cardano seems to be in a reasonable position. I would say that we probably are looking for a bounce up towards equilibrium. Okay, we can see down on our stochastic RSI that it is oversold on the weekly, the daily, the 4 hour and the 1 hour. Okay, so we've seen this pull to the downside, but we are now thinking there's going to be a push to the upside here. Now, we are still in a bearish structure on our hourly chart that has not changed. We can in fact see that's all the way from over here, and it was kind of started on the 5th of June. Okay, so we're still remaining in that structure. We've got some small movements and stuff going on here, but for the most part it is still in that bearish structure. But we need to consider a few different things that are potentially occurring here for Cardano. Okay, so we can see that we had this 5-wave structured move to the downside this side, and this over there at the moment could be a real big problem for Cardano's ADA in the future. Okay, but it's looking okay that for a push to the upside, but I'm not confident on thinking that this is a positive sign on the macro level. So let's go ahead and just take a look at a few things. So here we can see that we had a move to the downside. We bounced up to about here, and we came down to the just above yeah, actually, we bounced down on the 1.272. Okay, so we're not impulsive, but we are at a problem area where we might start to think zigzag patterns. Okay, and more specifically, double zigzags. So if we kind of see this coming down here, we can kind of see the 5-wave structure kind of playing out here, right at the very end, close to the impulsion, but not impulsive. Now, we start to move up, and we can start to see here again another 3-wave pattern. Nothing terribly too unusual about this one. It kind of completed here. Then we start to come back down into another 5-wave pattern to get us into these lows, and again another potential zigzag right inside here. Okay, not impulsive or anything like that, but you can start to see that, okay, well, we might start having these zigzag patterns starting to reappear on repeat. This is something that happened back when it set its original low, way back, I want to say in like actually, let me bring this to a daily. I can't actually remember the exact date, and I don't want to, yeah, down here. So back in December of 2022, right, we saw a lot of these zigzag patterns playing out, and they were repeating themselves. So we had a triple zigzag pattern right inside here. So we show you that, right? W, X, Y, X, and Z. It's a triple zigzag pattern. And so what we're looking at over this side is the potential for either a big, because we are impulsive on a level to a degree here, specifically here, right? 1, 2, 3, up for 4 and down into 5, right? So we can see that, but what we might be forming is a diagonal ending structure. Okay, so an ending diagonal, it could be a contracting diagonal, could be an expanding diagonal, but that seems to be where we potentially are leaning towards at the moment. Okay, now on this daily time frame, you can see that we're in a bearish structure as well. So let's bring this back up into our hourly chart here. right? So if we're starting to see this, then what's our next expectation? Well, the next expectation is going to be a move to the upside. Okay, so we kind of see this, we've completed this move to the downside, and what would that next expectation be? Well, the expectations here are that we're probably going to have to move up more towards 27.8. Okay, I'm going to just draw a little box on here. And I'm just going to format this style ever so slightly with a bit of a background color. There we go. Okay, so this particular area, 27.8345 to 28.3602. Right, let's go ahead and remove that. So that's the approximate range there, and it would look like a corrective pattern like this, taking us to here. Now that would allow us to remain keeping this local high set at 28.9209. That would then allow us to then start thinking, okay, well, if we're coming down in this big impulsive or diagonal structure, that could be wave 1, that could be wave 2, we've got to come down into a wave 3, and these are all going to be 3 by 3 by 3 by 3. So let me show you. We'd have a wave 1, wave 2, wave 3, wave 4 that overlaps with wave 1 and then come down. Now, the problem that you have here is that if we're doing a diagonal, there's 3 different variations to this. Let's come down to some empty space. We have ourselves the ending diagonal, nothing terribly too glamorous. Wave 1 and wave 4 will overlap. Wave 3 will be 1.618 times wave 1. If we come on over, we would have a potential contracting diagonal pattern. This one would basically be like this, okay, and it would contract down over time. It's probably really poorly drawn. Let me just try to make that a little bit neater as I draw the trend lines in. So yeah, it would look more like this. Okay, and it would fit within its little range here. Okay, then of course you would have the opposite of that, which would be the expansion, and I'll make my life a little bit easier by making it draw it out first with the lines. So we'd have a small wave 1 up for a wave 2, a big wave 3 up for a wave 4, doesn't have to touch the trend line but just has to overlap wave 1, and then the biggest wave would be the wave 5, and that would take us down very significantly. Let's see if I can draw that out a little bit clearer. Okay, and it would look something to this effect here. Might even be that wave 2 pulls back down just ever so slightly and it expands out gradually over time. Okay, so we have the ending diagonal, a contracting diagonal, or an expanding diagonal, all of which could be in the formation here. Now with those, sometimes we don't hit our actual target range. Okay, so our target range for ADA's final fifth wave movement here is going to be here, right? It's going to be between 18.6 and the slightly higher range at 20.67. Okay, so that's going to be the range that we're looking for that final fifth wave movement to kind of come into, right? And how we get there could be a couple of different things, right? So as we say, this could be expanding. So we have a wave 1, wave 2, a big wave 3, up for a wave 4, then the final big fifth wave movement came down. And each of those are likely to be 3 waves internally. So we'd have a 3-wave drop in here, for example, that could be a zigzag pattern, that we'd have another 3-wave pattern, and then another big 3-wave pattern. Okay, so there's no impulsive structures within it. And so that could be the route that we actually end up taking for Cardano in this final fifth wave movement. Now, obviously, the bulls are going to be like, well, you know, maybe that's not going to play out. How high does this thing have to go to basically prevent such a thing? And well, we do have a rule for that as well. So the structure would get invalidated here at 34.8975. Anything above that level basically says we're not in a wave 4. You know, you're done. The lows are in, and we can now look at different structures with just a potential of 335 to the downside and nothing more than that. Okay, and here I'm noting that an extension within the fifth wave movement of wave 1. That's kind of how I'm looking at this at the moment. So we have a wave 1, 2, 3 up here for 4, and then an extension into fifth. Then we're up in 3, and then we're impulsive to the downside. That's currently how I look at it. And you can also note there's a couple of fair value gaps on here. So the fair value gaps are going to be areas of interest in the future. Let's jump on over into BitGet, go into spot trading, and do I have ADA? No, I don't. I'll come into Bitcoin and I'll just search for ADA. So if we come into here and just ADA that up, there we go. Okay, so we have the fair value gaps, as we can kind of see in here. Let's turn the auto off. We don't want that on the low side, but there's also fair value gaps on the high side. Okay, and we note those up here as well. So we've got a lot of room to the downside and a lot of room to the upside. For those who do not know or are unfamiliar, fair value gaps are created from imbalances in the order books. Essentially, on the way up here, too much buying pressure, not enough selling pressure. It's an illiquid zone in price. Price jumps from the low to the high and leaves the gap behind. Price likes to go back down and fill these gaps. So at some point in the future, we're looking to move down, but we're also looking to move up. It bounces around a lot. These can help you with trading if you can spot them early enough, and you can kind of see structure, market structure plus fair value gaps, smart money concepts, Elliott wave theory. They're all fantastic tools for helping us understand where the price action has the highest probability of traveling to. Okay, because that's a game. This is essentially what the game is. It's a game of what is the most probable outcome here. Take a look at the market structure, take a look at the sentiment of the space, take a look at smart money, take a look at Elliott wave, and all these things kind of combined helps us understand where that market is heading, and therefore we can be predictive over where we think that next potential move is going to be. So for the case of Cardano here, we're looking at a potential move upwards before we break on down. So these fair value gaps will be a later stage, and we'll potentially be just looking at testing up some of those highs. No real fair value gaps of note, but market structure is indicating that momentum is shifting upwards, and the structures are looking like they have to go up as well. So on that note, I'm just going to kind of talk about 𝗕𝗘𝗪 here for a second. If you haven't yet already signed up, check it out. Affiliate link is in the description below. It's a fantastic platform that does a lot of spot trading and leverage trading, depending on what you're kind of looking for. It is my go-to platform. I do all my leverage trading based on 𝗕𝗘𝗪 now, and I do about 90 to 95% of my spot trading here as well. The occasional coin and token that isn't available on 𝗕𝗘𝗪, I usually go to 𝗕𝗓𝒄 or something like that. But for the most part, I'm using 𝗕𝗘𝗪. I think it's a fantastic platform. It's why I talk about it so much. And yeah, if you haven't yet signed up and you're looking for a new exchange, then why not check it out? Affiliate link is in the description below. Let's jump back down into the charts. So as we can see, we had the upper resistance on our daily time frame, that 40 to 47. That's the rejection point, and we're still looking to go down into new lower lows overall, in my opinion. The zones, as we kind of had scoped out at the 18 to 20 cent level, we tapped into the fair value gap over here briefly, but it's not yet filled, 19.6 to 22.89. So for the most part, I think everything's looking okay for Cardano. Good accumulation zones. I'm not thinking that this thing is done in the water. I think there's plenty of opportunities for Cardano, and I think the future is incredibly bright for ADA, and therefore, as such, I think it's important that we reflect on what that might mean as an opportunity that is in front of us here. I think many whales will be looking to accumulate massive positions on ADA, and this could be that opportunity for the retail investor to also follow suit, at least in my humble opinion. I'm going to leave the video right there though, guys. If you have found it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done and out of the way, guys, I hope everyone has a fantastic day, and I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.